Hello traders, Dez here with Grok Trade. It's Tuesday, July 9th, 2013. The markets go bullish. We have the S&P up 0.72%, with the Dow up 0.5%, Nasdaq up 0.56%, and the Russell's up 0.9%, with the banks up only 0.41%, lagging yet again. VIX dropping by almost 3%, confirming today's move at 14.35. And you have precious metals doing well. You have gold up 0.93%, silver up 0.8%, and crude oil up 1%, with the US dollar up 0.4%. Transportation index up nicely, 2.26%, really giving a lot of credence to the move that we saw here on the Dow. You'll notice that we're looking at the S&P 500 exchange traded fund ETF called the Spider, SPY. And the reason we're looking at that is because I want to do a little demonstration on price action versus volume. And the analogy I will give you is this. We have a lot of pilots that come through, both professional and recreational, that come through the mentorship program. But one professional pilot that flies for U.S. Airways used this analogy in our class, and I thought, that is an interesting analogy. I'm going to steal that, but I'm giving credit to him. This is what's interesting. Now watch this. Look at price action as a jet. The jet is going higher and higher past the clouds to higher elevations. However, the problem is the gas. Look at this is the volume. The volume is now gas, and you let go on the gas. You let up on the throttle. When you let up on the throttle, as you go higher, jets or planes will stall, and gravity will then take over. The same effect takes place here in the broad markets and in any stocks. As far as technical analysis is concerned, you want volume confirming price action. So if we're going higher, normally you would need more and more volume, more and more gas. Volume is basically a measurement of the worth of price action itself. So what do we see and what can we expect? What we do see is a downtrend, lower swing highs, lower swing lows, broken. We're starting to head higher here. We're over all major moving averages, coming to a major point of resistance. So if you play the spiders, look at 165.75 as an area of resistance. So let's go to the S&P 500 itself. Big symmetrical triangle. We did break out. Yesterday we hung up at a resistance point. Boom, popped up here nicely, come to a resistance area of 1652, but we closed over it by just a fraction, 1652.32. So not too bad, but we're kind of in this resistance area. What surprised me going into Wednesday, if we stall right here at this area, we are very extended, gang, and on dissipating volume. So a big correction can happen. Be watching that like a hawk. And taking a look here at gold, we have a lot of little gaps here. This gap filled today, so this gap is filled with the doji. Don't get too excited about gold right now. Silver, this gap is not filled yet, so we can get a little pop here before it drops, but just be very careful with precious metals. They seem to be on a bubble. And for all you Google players out there, have what's called a hanging man reversal pattern. The Nasdaq logs its best close that it's seen in 13 years. So be very careful with the markets as a whole. But Google here could be in trouble. Apple is up 1.76%. Nice high base, big engulfing type pattern with a close above a resistance line. Even though it's a ghost line, this thing is, I'd be watching for more upside potential because this happened on increasing volume. Not too bad. And then you have Facebook coming alive. Big gap up and a run up 3.12%, but we're in the middle of all these moving averages. Be very careful because you can get chewed up alive in this environment. So there you have it. You get the very best technical analysis right here. And join us tomorrow night. Here's your last chance. You want to get signed up. This is maybe the last free one we're going to do. Right here, 101, gaps and trend reversal patterns. It's a free class tomorrow night. Sign up. You have to register. If you can't make the class, no worries. We'll send you a recording. Just make sure you get RSVP. Take care. Very safe trading to all you, and we'll talk soon. Bye.